Let's commence our trading journey. Hence, I'm aligning with a downward trade because the indicators corroborate the continuation of this movement. Both the Parabolic SAR and MACD firmly reinforce this viewpoint. Now let's delve into this Wells MACD strategy. Hello, it's Mary here, and I'm genuinely thrilled to have you here watching this video. It's clear that you share an interest in trading just like I do. I've established this YouTube channel as a platform to share the knowledge I've accumulated throughout my years in the trading world. I've gathered some valuable insights, and I thought, why not share them? You can expect a variety of engaging and informative content here, so don't forget to hit the subscribe button and, of course, show your appreciation by giving our videos a thumbs up. Oh, and one more thing. I've got my very own Telegram channel where I regularly share precise trading signals. If the idea of collaborating with me piques your interest, make sure to hit the subscribe button for my Telegram channel. You'll find the link conveniently located below this video. Today, I'm excited to introduce you a binary option trading strategy known as Wells MACD. We'll delve into a comprehensive overview of this strategy, discussing its key features, how to efficiently filter out false signals, and I will provide a step-by-step guide on setting up the necessary indicators and selecting the appropriate timeframes. The Wells MACD strategy harnesses the power of two key indicators, the MACD indicator and Wells-Wilder's Parabolic SAR indicator. We'll be utilizing a 5-minute time frame for our analysis. In this strategy, the Parabolic SAR takes center stage, while the MACD assumes the crucial role of filtering signals. As always, I'll begin by presenting real-world examples before diving into the underlying theory. So, sit back, relax, and enjoy the content. Let's commence our trading journey. An impeccable setup has emerged on the Euro and Great British Pound currency pair. The Parabolic SAR indicator has just placed a dot above the most recent candle, while the MACD has descended below the zero line. These occurrences strongly signify a robust downward trend. Hence, I'm aligning with a downward trade because the indicators corroborate the continuation of this movement. Both the Parabolic SAR and MACD firmly reinforce this viewpoint. In this juncture, it might appear as though I've made an error due to a slight rebound from the support level on the chart. However, such instances are entirely typical. Within 3 minutes, the price is expected to dip below. Now let's delve into this Wells MACD strategy. It has gained popularity owing to its ability to deliver favorable results with comparatively modest associated risks. In this strategy, we employ just two indicators, as mentioned earlier, the familiar MACD and the intriguing Parabolic SAR, hence its name, Wells MACD. The primary player here is the trend indicating Parabolic SAR, with the MACD serving as a filter to affirm the trend's strengths and consequently the signal's potency. In the broader context, Parabolic SAR stands as one of the most venerable technical indicators, conceived by the same developer responsible for the renowned RSI indicator. Represented as the red and green dots on certain platforms or blue dots above and below the candles on others, Parabolic SAR consistently provides precise signals for trend reversals. The underlying principles remain uniform across platforms, with the option to acclimatize to the colors or personalize them. Meanwhile, MACD enjoys its status of a classic indicator stemming from its inception in 1979 by the illustrator Gerald Apple for the stock market. Effectively amalgamating oscillator and trend indicator properties, it swiftly found application in forex and binary options, where it continues to demonstrate remarkable efficacy. Now, allow me to reiterate the entry criteria for this strategy. Entering a trade on the upside transpires when a downtrend metamorphoses into an uptrend. The indicators convey this transformation as follows. Parabolic SAR initiates the placement of dots below our candles, while MACD ascends past the zero level from below. In essence, it's straightforward. Spotting dots below accompanied by an upward trajectory in MACD signifies a buying signal. The selling signal mirrors this pattern. Parabolic SAR commences the placement of dots above the prevailing candles, and MACD descends below the zero line, leading to red bars beneath the zero line. Consequently, despite the initial uneasy rebound, the trade concludes profitably. Evidently, this strategy has performed exceptionally well, with the downward trend gaining formidable momentum. Therefore, I recommend acquainting yourself with the Parabolic SAR if you intend to trade in harmony with the prevailing trend. The Parabolic SAR indicator. The Parabolic SAR indicator is a technical indicator used to determine the price direction of an asset, as well as draw attention to when the price direction is changing. Sometimes known as the stop and reversal system, the Parabolic SAR was developed by J. Wallace Wilder Jr., creator of the Relative Strength Index. On a chart, the indicator appears as a series of dots placed either above or below the price bars. A dot below the price is deemed to be a bullish signal. Conversely, a dot above the price is used to illustrate that the bears are in control and that the momentum is likely to remain downward. When the dots flip, it indicates that a potential change in price direction is underway. For example, if the dots are above the price, when they flip below the price, it could signal a further rise in price. As the price of a stock rises, the dots will rise as well, first slowly and then picking up speed and accelerating with the trend. The SAR starts to move a little faster as the trend develops and the dots soon catch up to the price. The following chart shows that the indicator works well for capturing profits during a trend, but it can lead to many false signals when the price moves sideways or is trading in a choppy market. The indicator would have kept the trader in the trade while the price rose. When the price is moving sideways, the trader should expect more losses or small profits. The Parabolic SAR is also a method for setting stop-loss orders. When a stock is rising, move the stop-loss to match the Parabolic SAR indicator. The same concept applies to a short trade. As the price falls, so will the indicator. Move the stop-loss to match the level of the indicator after every price bar. This indicator is mechanical and will always be given new signals to get long or short. It is up to the trader to determine which trades to take and which to leave alone. For example, during a downtrend, it is better to take only the short sales, like those shown in the chart above, as opposed to taking the buy signals as well. What is moving average convergence divergence, or MACD? MACD is a trend-following momentum indicator that shows the relationship between two exponential moving averages of a security's price. The MACD line is calculated by subtracting the 26-period EMA from the 12-period EMA. The result of that calculation is the MACD line. A 9-day EMA of the MACD line is called the signal line, which is then plotted on top of the MACD line, which can function as a trigger to buy or sell signals. Traders may buy the security when the MACD line crosses above the signal line and sell or short the security when the MACD line crosses below the signal line. MACD indicators can be interpreted in several ways, but the more common methods are crossovers, divergences, and rapid rises or falls. MACD is a valuable tool of the moving average type, best used with daily data. Just as a crossover of the 9 and 14-day SMAs may generate a trading signal for some traders, a crossover of the MACD above or below its signal line may also generate a directional signal. MACD is based on EMAs, which means that it can react very quickly to changes of direction in the current price move. But the quickness can also be a two-edged sword. Crossovers of MACD lines should be noted, but confirmation should be sought from other technical signals such as the RSI or perhaps a few candlestick price charts. Further, because it is a lagging indicator, it argues that confirmation in subsequent price action should develop before taking the signal. Thanks a ton for tuning in, and remember to subscribe and give us a thumbs up. And don't forget to subscribe to my Telegram channel where I'm dishing out those precise signals. If you're up for working together, just subscribe to my Telegram channel. You'll find the link right under this video.